ONGC TV18, celebrating 15 years of leadership.
Hello and welcome to Taking Stock, your weekend dose of all the market action and of course all the important cues that you need to watch out for in the week to come. This week was a tough week for the market. The Sensex and the Nifty were both down 4%. We had lots of turmoil across the globe. Brent crude fell quite a bit. So we have two guests to tell us how to approach the week to come. But first, Anuj is also here with me. Anuj, difficult times for the market. So we've lost about 4% this week.
Difficult times, but with enough warning signs. The market gave last week, with distribution phase, and with on last Friday the market was telling a lot of traders, maybe you're overstaying your welcome in the mid caps. And also this week, this week was picture perfect for the bears because every rally was sold into. The market has now corrected 5% on the Sensex from the top. Previous correction was 5%. You do get a sense that this time it's more violent in nature, and you haven't seen the worst being flushed out because there's still mid-cap outperformance, relative outperformance. For the markets to bottom out, you would get a sense that the mid-cap index needs to go down, say 10% or so, even if the Sensex and Nifty don't go down. But let's talk to our experts. Maybe they have better answers for us.
Yes, so let's invite Vibhav Kapoor of IL&FS, and in a bit we'll get a technical expert as well. Vibhav is right here with us in the studio. Hi Vibhav. It's been under the weather for the market, just like you're under the weather today as well.
For that, yeah.
But do you expect to see more by way of downside?
Yeah, I think I agree completely with Anuj. I think we've had a great run-up in the last several months, and valuations are no longer that cheap. The global picture is looking, I'd say, more than a little murky. There's sort of things happening. Oil fall is definitely a positive, but a very fast oil fall is probably not. It has its own negative implications for the global economy and for certain players. So I would definitely think we are in for choppy times, at least for the next, I would say, 4 to 6 weeks from here onwards. And probably difficult to see a new high being made in the market over the next 4 6. I think the correction which is set in now is more real than the corrections we've had earlier, and you could definitely have another 5-7% downside to the market from here.
So, Vibhav, what kind of pockets would you identify if it still remains a big bull market? What kind of pockets would you identify to be, to buy once the correction is approaching an end, or stocks you would like to even accumulate right now? What pockets would those be?
See, I think right now probably try and avoid buying anything. I think, as you rightly said, there's still more violent correction to happen, particularly the mid-caps in some of the sectors. The banking sector and the financials, for example, have not really corrected much. They've been really strong in this whole thing. So maybe when the correction approaches an end, you'll actually see a fall in the financials, the last to fall because they're the strongest. But I think the sector definitely to look for, to buy whenever you want to buy, is really the financials still. The private sector banks, maybe some of the PSUs, the NBFCs, the housing finance companies, that entire sector looks pretty good. And then, of course, there'll be, some other select things like oil and gas, for example, and, things like ONGC, just an example, has really fallen a lot. You would expect some reforms to happen in the oil and gas sector at some point of time. So that would be a second sector. And then maybe some of the other large cap cyclicals, like, if the autos were to fall, for example, a lot, or maybe, some of the capital goods sector. So play on the economy, so to say.
In fact, you were talking about oil and gas. That was a big casualty on Friday. And even for the week, if you look at it, GAIL is down 10%, Reliance is down 10%, Cairn is down 7%. Apart from ONGC, any other oil and gas stocks that would interest you?
No, what has really happened is that oil and gas, there are two things, obviously. One is because of the fall in oil prices, certain stocks like Cairn India, for example, maybe GAIL, they are getting impacted. The other is, so far, the absence of real reforms in the oil and gas sector. We have an ONGC issue slated to come out at some point or the other, but the government has still not made clear what the subsidy share out or pattern is going to be. So that needs to be done, and that is hitting some of these companies. So it will depend. If the government does come out with some rational subsidy sharing formula, then probably some of these upstream companies can really do well. So it's going to depend on how things pan out.
Okay. Vibhav, the other thing which happened this week, and which was quite peculiar, was that IT was no longer a safe haven. In in face of A, falling market, and B, falling rupee. That was something which was quite bizarre and surprised a lot of people. What went wrong for IT this week, and what's your call on stocks like Infosys and TCS now?
Absolutely. I myself am surprised, to be honest. I mean, we never expected the IT sector to behave the way it did last week. The only thing one can say is that probably valuations had gone up a lot. The stocks had done really well. If you look at the IT index, it's really gone up in a huge way. And so some money is being taken off the table. Apart from that, I can't really find any reason for IT stocks to go down the way they have or correct the way they have. So it's probably just a correction in a big sort of bull market which is happening there. The rupee definitely looks to be depreciating a little more from here, maybe another 2-3%. So there's no problem on that side. The US economy is doing well, so that's fine. Sometimes you just wonder, and I don't know, I mean, it's too early to say whether, you know, this whole thing about disruptive technologies coming into technology, for example, cloud, etc., is something which is having some impact at the back of investors' mind, whether, you know, this can disrupt the business model of the Indian companies to some extent. I'm not sure. It's too early to say. But definitely, at the moment, I think, yes, IT is still a good buy on corrections. And yes, it is a bit surprising that the way these stocks have reacted.
That's an interesting observation. You know, a couple of weeks ago, before this global turmoil, a lot of people were talking about 9,000 before the budget. Do you still expect to see a pre-budget rally, and should we still expect levels like 9,000 pre-budget?
Well, to be honest, we weren't very far. You know, we had already reached 8650, which is what, some 3% away, and with still some 5 months to go for March. So to that extent, I think that sort of 9,000 has been reached. I think the next, as I said, 4 to 6 weeks can be pretty choppy for the market. So you may even see a 5-8% correction. After that, I think you will have a pre-budget rally. After all, the fall in oil prices, the overall fall in commodity prices, and the expectations of inflation going down, and it's all positive for India. So somewhere along, you know, when prices have gone down or the correction has completed its course, you'll suddenly get a lot of buying again to come in, and you will get a pre-budget rally. So I would still say yes, somewhere between 8,500 to 9,000 would be a credible target for the Nifty in March.
One more thing which happened last week was that a lot of high quality mid caps corrected, and once where the market was willing to pay a premium pricing, you know, growth premium, you know, that corrected quite a bit, and that was, you know, accompanied by some companies coming out and, you know, lowering guidance or whatever, whether it was Havels or TTK Prestige. So do you get a sense that some of these quality mid caps which have run up 100 to 200% could see massive correction from here on, maybe even more than 10% even from this level?
Yeah, I'd like to make 2 or 3 points there. One is consumption. For example, you said TTK Prestige. Now, it is pretty clear that things have not picked up the way investors or the market expected them to pick up, at least in the short term. So definitely there are going to be disappointments in stocks or sectors where the valuations have gone sky high, and that's what is getting reflected in some of these. But if you look at some of the investment-led sectors, now they're not only the mid caps. You look at a stock like L&T. I mean, what has it done in the last 5 months? Nothing. It's probably back to where it was, you know, in May.
It was down 8% this week as well.
Yeah, and in May it was probably around this level. I don't remember. So in the last 6 months, nothing has happened. Again, a case of, you know, expectations too early and too fast and thinking, but, you know, things are really not yet happening on the ground. They will happen, and if you look at it, the whole market is predicated on one thing: FY16, FY16, FY16. Things are really going to be great in FY16. The third is that, in the same vein, you know, every single analyst, fund manager, investor, I haven't come across even one person who thinks FY16 is not going to be great and the markets are not going to do well. When that happens, you need to be a little cautious.
All right, Vibhav, we'll have to wrap up on that note. Thanks so much for joining us. On that cautious note, you have a good weekend and get well soon. Thanks for joining us on the show. Well, that's the word coming in from IL&FS, but we have another guest who joins us on the other side of the break. Before we do that, let's listen in to some market opinion we heard through the course of the week.
I doubt if we'll get a major fall. Can it go slightly more deeper? Difficult to say, difficult to rule out. But, I mean, if you define major as more than 10%, I don't think so. If you define 5 or 6% at major, 3.5 has already happened. Another 2% can happen. Tough to say. I think 24 months will go to the extent of saying market could be 30-40% higher as compared to the current level. Next 6 months, I think, can be fairly challenging. It could be chopping up and down.
Index itself is 100x in 30 years. This is a kind of record. In US, the Dow takes 50-60 years to go 100 times. I mean, today's 18,000 of Dow, 180 was sometime in 40s and 50s. Whereas index was 280 in 83-84. So it has just about taken 30 years.
CNBC TV 18, celebrating 15 years of leadership.